Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Just when it looked like the US and Trump were looking to try and get a negotiated settlement to the Iran-Israel dispute, the US goes and bombs Iran. Now, supposedly there was going to be a 2-week sort of hiatus waiting for negotiations to take place. That lasted 2 days, and then Trump announced a surprise attack. Now, quite interesting on the information they're acting on, because Trump's own Director of National Intelligence, Tulsi Gabbard, has stated that she didn't think Iran had the capabilities of having a nuclear bomb. Trump has dismissed that and says she's wrong, and obviously the attack took place over the weekend. Now, it'll be interesting to see what that does for Trump's sort of approval ratings, because that had been sort of sinking with every week. He's facing fresh criticism, obviously, with the troops on the streets of LA, facing increasing legal challenges as well to his policies. Now, obviously, you would expect Iran to have some sort of retaliation. It's just going to be interesting to see what sort of form that takes. Obviously, the initial worries will be oil. That's currently around sort of 74.80 and change. Most analysts expect that to sort of trade up. And obviously, that has inflationary implications for the global economy. Which again could be quite interesting, because the Fed left rates on hold last week, citing that at present there are still too many uncertainties out there. Potentially there are inflationary implications with the tariffs. And now, obviously, with this ongoing dispute now and the US sort of entering this Middle East conflict, potentially oil prices are going to trade up as well. Now, interesting as well, the Fed did downgrade its GDP forecast, brought it down to 1.4. Now, a couple of months ago, they were looking at sort of a 2.2 read on that. They've also nudged up their inflation sort of readings as well for next year. Only by a couple of tenths, sort of looking around 3.1 from 2.9, but it's still sort of heading in the wrong direction. Now, Trump, as usual, after the Fed announcement came out, was criticising Fed power, saying it should be cutting interest rates by a percentage point, if not 2 percentage points. Now, Trump's big, beautiful bill as well is still facing sort of a few hostilities in the Senate, and it's just going to be interesting to see if they can get that sort of passed. Because certainly most of the sensible Republican senators who aren't sort of yes people to Trump do acknowledge that it will increase the deficit. And obviously, time is ticking down to sort of July, and that July deadline now for the tariffs. So it's going to be interesting to see what Trump does about that, because certainly there have been very few deals come through. Now, interest rates in the US holding steady. 10 years around 4.35, 2 years around 3.98. Now, 30 years backed off from 5% now. Currently around 4.85. But obviously, after the events over the weekend, it'll be interesting to see how the market trades this week. Trump has also done a minor sort of flip as well on some of the deportations, because a lot of sort of farmers are complaining now that they don't have people to work on the farms, because despite what Trump claims that the US were having their jobs taken away, US citizens don't want to do these jobs. Also as well, hospitality. So oil, let's say, currently around sort of 74.80 and change. That's up around 20% over the last couple of weeks. Now GDP in the UK did fall by 0.3%. Last reading was sort of plus 2%, plus 0.2%, sorry. So, you know, the UK economy is a little bit sluggish out there. But against that, you've seen a slight increase in prices as well. So inflation is sort of on the uptick, which potentially makes it hard for the Bank of England to cut rates. Now in the EU this week, there's a big NATO meeting. That's going to be very interesting. Obviously, Iran conflict will be front and center there. But not forgetting as well, obviously, there's still the Israeli-Gaza conflict, but also as well, you know, completely almost forgotten about now, Putin is still bombing Ukraine on a daily basis. Now Australia, the cash rate currently 385 and still looking at potentially sort of 2 more cuts this year that would take it around to 335 by year end. Now, a little bit of good news in New Zealand. For the March quarter, GDP was up 0.8, which was slightly firmer than anticipated. But potentially, does that mean that the Reserve Bank doesn't need to cut interest rates now at its July meeting? Dairy prices have shown a huge increase over the last 12 months. Butter is up over 50%. So obviously, while that's good for the dairy industry and exporters, it's not so good for the domestic purchasers. Now, with still many mortgages to be reset over the next sort of 3 to 6 months, you know, potentially there will be quite a bit more disposable income coming into the economy. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.